Udaya Kumar, the Managing Director and CEO at Credit Access Grameen. We've been discussing the fantastic movement on the stock and thought it was a good time to understand from you, Mr. Kumar, some of the ongoings there. So let me just, get started. There have been some concerns on the liquidity and trust deficit that's been created in the NBFC space. So I want to get your views on the same, on the scenario, and really, how well your company is placed in the current context. Just share with us really, your view on ground.
Sorry, I couldn't hear you the first part of your question, please.
No problem, Mr. Kumar. I know sometimes those wires can be a little tricky. I was saying that while, of course, your company and the stock price has been looking good, on ground, what's been your perspective? What have you really picked up, in terms of the growing concerns with regards to the liquidity and trust deficit issue that's currently pervading the NBFC space and the current market conditions? From your perspective, how do things stand?
The liquidity concern of the NBFCs, of course, that's an issue. But when we look at microfinance sector, this microfinance sector is resilient to this just because of their positive ALM always. Specifically for our company, we have not faced any liquidity constraint. We grew 44% last year, and we have been doing well. And we have sufficient liquidity in place, and we don't see any major issues. Of course, for our MFI industry as well is facing it well because of the positive ALM as well as the private sector lending requirement for the banks.
What is your large source of funding? Every time when you need capital, how are you raising capital, and from where are you raising capital?
Yeah, we have sufficient capital at this point of time because we raised money by IPO last year, which is sufficient for next 18 months for us. And funding point of view, we have from banks, and majorly we are raising internationally through NCDs and ECBs for long-term resource. Almost 40% of our borrowing happening from ECB or NCD or securitization or direct assignment, and also 50-60% from banks and FIs like NABARD, SIDBI, and IFC, Mudra, these sort of institutions.
Mr. Kumar, since you would have a right pulse on it, wanted to understand what trends do you foresee for the rural segment of the economy? For that particular sector, how is credit growth looking like amid concerns of this economic slowdown? Is it hitting the rural sector of the economy as hard as urban?
Our understanding is microfinance segment works in rural definitely. There is a slight difference between rural distress and the farmer distress. We have seen some sort of farmer distress in some part of the country, some part of the locations, but we don't see a rural slowdown in terms of non-availability of job or a non-availability of income. I think rural income is quite strong, and particularly the segment where we are working. I think the amount of loan what we provide is quite small, and the repayment is quite low. We don't see any challenge. At least our segment, particularly this industry where it works, we have not seen any kind of distress or delinquency on account of this rural slowdown. We feel that it is a temporary, and it would reverse quickly.
You're optimistic. What do you think will change, or how exactly do you think demand will come back?
For our segment of business, this is particularly the income generating loans for the customer to start a new transaction, for example, to buy a cow or to buy goats, so that they enhance their income source. For that, the demand is in the local. It is not outside the rural, actually within the rural. It's a local consumption. They provide that kind of resources actually. So which is not coming from outside, which is normally within the locality. It's a local society. They provide the milk, or they sell the goods, or they sell the local bangle selling, clothes selling, or fruits or vegetable selling. This is not coming from outside. It's a local sustainability economy. We don't see any major challenges for that to continue. And an external event not necessary to create a demand for our segment of customers' productions. Okay. That is why it's continued to be sustainable business in this particularly microfinance business.
Sure. Just your outlook on growth going forward, while you are saying that you don't expect the things to remain sluggish for long. Outlook for your company, as well as any expectations that you have from the upcoming budget or from the government in terms of stimulating growth further.
Yeah. If you look at the last year, microfinance industry grew about 38%. Credit Access Grameen grew about 44% in terms of portfolio. We estimate that kind of 35 to 45% growth in this segment would continue for next couple of years. And because the potential is quite large still, this market, if you see last year, about 26% of the customers who we served are the new for the microfinance or new for formal economy, which would continue. In case of Credit Access Grameen, 48% of the customers what we acquired last year were new for formal finance. So this kind of potential available in rural, which definitely will support the growth what we are anticipating between 35 to 45%.
Also, Mr. Kumar, wanted to understand what's really going on with your company, because for FY20, you yourself have set out a profit guidance of 425 to 420 odd crore rupees. Are you on target to achieve these kind of numbers?
Sorry, I missed. You're talking about profitability?
Yes, I'm talking about the profit guidance which you highlighted in the previous quarter's numbers. You said that you will close FY20 with 420 to 425 odd crore rupees. Are you on target to achieve those numbers?
Yeah, we are on the same path of progress.
Given that bond yields have come down to 7%, what typically happens to the cost of borrowing for the system, and what happens to your spreads? Because when cost of borrowing comes down, obviously the interest rates which your competition and your peer group companies are giving, they could be forced to bring it down. Could that have an impact on your spreads?
No, not really, because the microfinance institutions are bound by regulatory guidelines, where the spread is between the borrowing and lending cost is about 10%, which is permitted. Of course, as the borrowing cost comes down, automatically end customer cost price also will come down. That is one story. Other story is actually this particular business is not price sensitive. It is availability of money at ground for this kind of customers. Even today, there is a large difference between the price. For example, we charge between 18-19%. There are institutions charging between 24 to 26% also on the ground. But that doesn't make much difference, because for a lady who borrowed 25,000, when she pays on a weekly basis, this kind of difference of interest makes only 5 to 10 rupees per week, which is not very sensitive, because availability of money is very, very important for this segment of business where no other formal lenders are available.
Right.
And in terms of our margin, we are legitimately allowed to get 10% of margin in terms of difference between borrowing and lending.
Mr. Kumar, thanks so much for joining us. Good to get updated on the latest over there.